Welcome to Smart Stock Watch. Today is February 13th, 2025, and we're diving into Deere's first quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Deere is a major player in the agricultural and construction equipment industry, and their latest earnings report provides a lot of insights into how they're navigating current market challenges.
Revenue and profitability overview. Let's start with the top line. Deere reported a net revenue of $8.58 billion for the first quarter of 2025, which is a 30% decrease compared to last year. John, can you shed some light on this?
Absolutely. The significant drop in revenue is primarily due to lower shipment volumes across their key segments. Despite this, Deere managed to achieve a net income of $869 million, translating to an EPS of $3.19, which slightly beat the analyst forecast of $3.40.
That's interesting. How did they manage to maintain profitability amidst such a revenue decline?
Deere has been focusing on optimizing inventory levels and cutting costs, which helped them maintain a reasonable level of profitability despite the challenging market conditions.
Segment performance analysis. John, can you break down the performance of Deere's different segments for us?
Sure. The production and precision agriculture segment saw a 37% decline in sales to $3.067 billion, with operating margins dropping from 21.6% to 11.0%. Small agriculture and turf sales fell by 28% to $1.748 billion, and construction and forestry sales decreased by 38% to $1.994 billion. The declines were mainly due to lower shipment volumes and unfavorable sales mix.
That's quite a drop across the board. What are the implications for Deere moving forward?
These declines highlight the challenges Deere faces in the current market. However, their focus on cost-cutting and inventory management could help them stabilize in the coming quarters.
Financial services and strategic initiatives. Let's talk about Deere's financial services and strategic initiatives. How did they perform?
Deere's financial services segment reported a net income of $230 million, up 11% from last year. This was partly due to a decreased valuation allowance on assets held for sale. Strategically, Deere is focusing on optimizing inventory levels and maintaining resilience in a challenging market, as highlighted by CEO John C. May.
It seems like they're taking a proactive approach. How do you see this impacting their future performance?
By streamlining operations and focusing on core strengths, Deere is positioning itself to better navigate the current economic environment, which could lead to improved performance in the long term.
Market outlook and risks. Looking ahead, what is Deere's market outlook and what risks do they face?
Deere has maintained its net income forecast for fiscal 2025 in the range of $5 billion to $5.5 billion, reflecting their confidence in managing through industry challenges. However, they face risks from currency fluctuations, potential tariffs, and competitive pressures, which could impact their performance.
Given these risks, what should investors keep an eye on?
Investors should watch how Deere manages its cost structure and inventory levels, as well as any developments in global trade policies that could affect their operations.
Key takeaways. In summary, Deere's Q1 2025 performance reflects the challenges of the current market, with significant declines in revenue and earnings. However, their strategic focus on cost-cutting and inventory management provides a silver lining. John, any final thoughts?
Deere's ability to slightly beat EPS expectations despite the tough environment is commendable. Investors should remain cautious but optimistic about their strategic initiatives and long-term prospects.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Deere's performance in the comments below.